everybody, it's Josh with the Crypto Empire. How are we all doing this morning? If you are waking up in the morning, you're watching this video or you're watching this like right when it was uploaded, it is April 18th, 2021. We just had a massive flash crash on Bitcoin, Ethereum, and about every single altcoin that's connected to them. And there's a few reasons why this all happens, why when Bitcoin drops, ETH drops, and all the altcoins drop. And there's a reason why these flash crashes actually happen. Now, I watch many different YouTube channels. I see a lot of guys, they're all good. They all have a different inputs on how this happens and why this happens. Well, being an institutional trader for over 12 years, I can tell you from experience exactly why this happens. And so we're going to get into a little bit of why these things happen and how you might be able to actually protect yourself from why these things happen. Now, firstly, let's take a look at this chart. And I'm going to go on over to KuCoin and we're going to just go look at KuCoin and check this out and see what we have going on here. And you're going to see a whole bunch of lines that I have on there. Just ignore this. If you get into my crypto mastermind, you'll learn a little bit more what these lines are. They represent supply and demand zones. Basically, the basic principle of economics is that a market moves by supply and demand. Now, we're in a 1 minute chart. I'm going to go hop on over here to a 1 hour chart. And we're going to look at this massive doozy of a flash crash. Look at that bad boy. Oh my goodness. That is just, oh, that is horrible. And see what we had right here is actually, see these two red lines right here. This was a massive demand zone. This means that there's a lot of buyers within this zone. And this actually dropped massively this way. Now, if you look at it, you can actually see what was happening here. Now, this was about a $68 million drop, probably way more than that. That's just for KuCoin reporting there. But basically what's happening when you see these flash crashes, this isn't F2 pool or any of the miners. This isn't a big whale dumping or anything like this. See, a lot of these exchanges, they're really just casinos. When they offer margin or 100x, oh, not what I wanted to do. When they offer margin 100x or 10x or 20x or 50x leverage, people with a little bit of money can leverage a lot of money. Okay. And so what you get is you have these people that have $100,000 who now can leverage $1 million, or who maybe have $800,000 who now can leverage $8 million, so on and so forth. And see, they ride it all the way up to the top. And see, what we had is these people that came and they dropped off, they took some profit, they came up, they bought back in, and then they took profit here. And they saw Bitcoin kind of tumbling down. And so they get out of their trade. What they did is they started basically getting out of their margin trade. Now, there's a problem here. If I have $8 million worth of Bitcoin or $8 million worth of ETH or something like that, and I'm trading on margin, how do I do this? Do I go in there and do a limit trade and sell on limit with 25% at a time? Or do these people who are probably new to the crypto industry, they're probably new to trading, and probably the first time that they've leveraged 2 million or 3 million or 4 or 5 million dollars. And I don't think they understand this. And I think this is one of the reasons why we're seeing all these flash crashes. Are you ready for this? If I'm right here, if we zoom in right here, okay, and we're going to take it right here. And so this first $10 million was most likely a leverage trade. Someone probably 900,000, 800,000, maybe even just 100,000 on 100x leverage, right? And they wanted to get out. They were probably in a profit zone, or maybe just had a little bit of profit. They're trying to get out. And they did a market order. They went here and did a market order, went 100% and sold. What that does is that flash crashes because the exchange has to find liquidity in order to make that trade happen. Not all the time are you going to have the same amount of liquidity at that certain point that you want to sell at. There only might be, 10 or 20 buyers who want to buy like 5 Bitcoin at that price that you're trying to sell at. So the exchange has to drop that price and fill that order at lower and lower and lower and lower prices. Well, if Bitcoin was coming down to what we would call a demand zone, and this is pretty natural in the sense of the scale of things, where Bitcoin would flow from this top supply zone down to this lower demand zone. Pretty natural. This is the natural flow of supply and demand in the sense of the market dynamic and how it operates. So someone saw this and they decided to get out of their trade because they didn't want it to come back down here and maybe they get stopped out. So they market ordered, and all of a sudden you have this cascade effect that starts happening. Well, this is what I call the cascade effect, is when price drops drastically within a short time frame, everybody else starts getting scared and starts getting out. Not only that, is certain other people who came into this trade in this demand zone start getting stopped out because they most likely have moving stop losses and this types of things, right? So maybe they got into the trade right here, okay, and their stop loss was right down here, and the trade goes on the way up. It goes all the way up here. So they move their stop loss right into this zone or something, right? And now the price is coming back down and they don't want to get stopped off. This guy does the market order and stops them out. So they get stopped out. And then the other people below them, because if they get stopped out, right, that's a market stop. So they most likely go in here. There's two types of stop losses, right? You have a stop limit and stop market. If people pick a stop market, which is the most common, 87% of people pick a stop market, and they pick 100%, which that's the mistake right there. If you're on leverage, if you're on margin, if you're 100x, 50x, 20x, 10x, I don't care. If you're on margin and you choose a market order and you're getting out at 100%, you are going to flash crash the market, especially if you are dealing with large amounts of money. What that produces is what we call a cascade effect. Is stop losses start getting stopped. Okay. If stop losses get stopped, then you got more market orders that start getting stopped out. Now what happens is some people start getting liquidated because some people don't use stop losses. When those people start getting liquidated, this is what you get. This big long candle downward, that is people getting liquidated. That is when the altcoin and ETH all dropped off too. And you have to ask yourself, well, why did altcoins and ETH get affected by Bitcoin dropping? Well, that's actually pretty simple. Firstly, if you're on margin, that means that you have to have something as collateral. Most people use ETH, or they're going to use maybe Cardano, or they're going to use another different type of altcoin as leverage for their margin trade. So that's one. So that means that this liquidation is happening in ETH, in Cardano, in Polkadot. You get that? So when these start getting liquidated through this cascade effect, it's liquidating all those altcoins that that person is using as leverage, as well as their Bitcoin. Or what can happen here, right? Or what can happen here is a lot of trading these days is institutional, and institutions use algorithms. Now, in the standard markets, this would be Wall Street, Main Street, these types of markets, you have algorithms that start like triggering what we call circuit breakers. And this means we're talking big institutions. We're talking BlackRock. We're talking major insurance companies. We're talking hundred billions of dollars worth of assets. And what it is if there's more than a 1, 2, or 3% change in a price over a short period of time, these algorithms automatically start liquidating positions. Now, a lot of these institutions hold cryptocurrency now, and they have for a long time. They've just been very quiet of it. But a lot of these same algorithms are holding cryptocurrencies, and the threshold variance. What I mean by that is the threshold of a certain percentage drop of price is basically aligned towards the regular markets that aren't as volatile as cryptocurrency. So if you have algorithmic traders that are holding 50% Bitcoin, 25% Ethereum, and then another 25% altcoins, and it's triggered a 3% price drop in Bitcoin and starts liquidating all of its assets, it's going to liquidate that 50% Bitcoin. It's going to liquidate that 25% Ethereum, and it's going to liquidate that 25% altcoins. And it's going to do that proportionally. And if you look at all the drops that you typically have with Bitcoin, Ethereum, and altcoins, it all lines up. You have these massive drops in altcoins because they have such a low market cap, and they have these really big moves. But in comparison to Bitcoin, it's proportional about 5, 10, 8, 6, 7%, somewhere around there, whereas Ether is usually about a 25% variation with the Bitcoin drop. So this is the one reason why we're having these flash crashes. And I thought it was incredibly important to bring this to your attention, because here's the thing. is it's always important to take profits when you're trading. All right. Now, this isn't financial advice or anything of that nature, but what I want you to understand is that when you're trading, if you're going to be a day trader, if you're not a hodler, I'm a hodler. I hold a lot of my positions. I do trade every once in a while, but right now, in the last few months, cryptocurrency is so volatile. You don't really want to be in these markets, especially on margin, because things like this will happen all the time. Now, I want to give you a few tips of advice before I let you go for today, but I wanted to go ahead and show you why that flash crash happened. And so let me give you these few tips of advice, how to prevent this from happening for yourself next time. If we go back to this, right, and this is KuCoin, by the way, and if you're interested in getting on KuCoin, they're a really cool exchange. They are linked up below, and there is a referral code there. So, you use my referral code, and it helps me, and it helps you as well. There's also other referral codes in below there. There's tons of them that you can get free crypto as well. There's one for crypto.com where if you go ahead and stake the 400 CRO and you get that little debit card they got where you just spend your fiat and you get crypto rewards for it, you and I both get $25 worth of CRO. There's one for Coinbase where after you make your initial deposit, you and I both get $10 of Bitcoin. There's one for the Voyager app where if you make your initial deposit, we both get $25 of Bitcoin. So there's some really good ones down there. Please check them out. If you are interested in just throw me a tip, the tip jar is down there. We do accept crypto. Much appreciated on that. But let's go over here and I want to show you this real quick. So do you see how the price came up here and then went away? And this is on an hour chart, right? But see how price came up here, did a double top, and then dropped away rather fast? That's called a rejection. And most people call these support and resistance lines. But if you've been trading a while, support and resistance lines typically occur in between supply and demand zones. And what I mean by that is supply and demand zones are very simply, where are people buying and where are people selling? Where's the greatest potential for somebody to buy? Where's the greatest potential for people to sell? And if we go in here, and I know I usually have these opposite, I have red upstairs and green downstairs. But if we look at the closest price that moved upward, okay, that is our newest demand zone. That means that there's a lot of buyers there, right? And it did touch it right there and started moving back upward. And it crashed through that because that was a flash crash. Flash crashes usually miss stop losses and don't fill all of those sell orders or buy orders in that position. That's why we had that actually happen. This is actually a really good demand zone. And once we get price back to this point, I think we're going to skyrocket back up to 60,000 pretty easily. But right up here, we have it go up here to an all new time high, right? Yep, all time high right there. And people started taking profits and started getting rejected. Then we have a little retractment right there, comes back up. People take profits again, and it immediately goes away because there's no more buyers up here. All we have is a whole bunch of sell orders. So I'm going to tell you this right now. The next time price comes up to this zone right here, this is about the 64,000 to 64,800 zone. Price is going to get rejected. It's probably going to go in there. It might test a little bit higher to 65,000, but it's eventually going to come back down probably to mid-range between 62 and 58. And that's anybody who's been trading for a long time is going to tell you the same exact thing just by looking at this chart. This zone is very fresh. That means it hasn't been up there that long. That means there's a lot of people wanting to take profit in this zone. And that's a lot of people on margin. Most of them, by the way, just got stopped out. So I could be wrong there. Most of them just got stopped out. But this right here, this flash crash was because people were getting out. And you notice these flash crashes, if you watch them, by the way, they typically always happen in these demand zones. And the reason is because this is where people are entering their trades. This is where people started getting in Bitcoin. Remember, this is where all the hype was coming up that Bitcoin's going to go past 60,000 again, right? And so this is where people started entering all their long margin trades. Price goes up, people take some profits, comes back down into demand, goes back up again. And all these people started moving their stop losses up, 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 and up, right? And they all have certain liquidation points when price started coming back down, that probably scared a lot of people out. And they started getting out on market orders, selling on market, dropping the price incredibly fast over short periods of time. Yeah, I know this is just a few hours, but you have to understand how this operates. We're talking about billions of dollars here. So they dropped the price really, really fast. And then you see right when we enter demand zone, that's when you have this massive flash crash. And that's because all the stop losses and all the liquidation points got triggered right here. That's all this is. This isn't manipulation. This isn't some mining pool trying to mess with us or anything like this. This isn't a whale sell-off. This was stop losses and liquidations getting triggered because of a cascade effect of people selling on market orders because price was coming back down to their entry point. That's all it was. So if you see this, by the way, one of the things that I do is I go in here and I drop a horizontal line and I put that horizontal line and I make it orange and I make it right between my supply and demand zones. Okay. And this is always a good gauge. And so we have this price drop down in here. So if I was up in here in this trade and I would have had profit areas up here. I would have been taking profit all above this line. So I would have been taking profit right in here. I probably would have been out of the trade. But if I stayed in the trade and it did this one right there, I would have got out. I would have immediately waited for the retractment right there and would have got out of this trade. And look at that. I would have been spot on. I would have been in the profit. I would have made a ton of money. And then I most likely would have got right back in here because we can see this massive buyback up. And then we have this long candle, which is basically almost a doji. And we would know that price is starting to move back up on this massive retractment. So kind of that's how I would play it if I were any of you guys. So just a tip of advice, if you're going to come into a trade on margin, you always want to come into the demand zones and you want to always get out on the supply zones. And we could have told you that this was a supply zone because you have this massive rejection point right there, small little retraction up, and then another rejection point. And so right when you saw this, you would have basically just said, okay, time to get out on this next candle on, and you'd start taking your profits. But, if you get into a trade like this and it's going to an all-time high, set a price point of good profit. If you get out on $3,000 of profit or $5,000 of profit or $20,000 of profit or $100 of profit, it doesn't matter. You're in profit. $100 of profit is way better than a $20,000 loss. So always set target price points. And if you want to learn more about setting target price points, setting stop losses, how to automate your trades on this type of style, how to always win on your trades by having a methodology of risk management and risk mitigation, check out our crypto mastermind. We're just starting a new one. We have another one on another platform. We just started this one. It's at www.socialcrypto.online. You can find it linked up below. www.socialcrypto.online. And this is our new one. We're just launching this one for you guys because we're just kind of launching this channel. We do another one on one of my other podcasts, but this one is specifically for you guys. If you want to learn how to trade like this, if you want to learn how to mitigate your risk, and you want to be in a crypto mastermind, not only how to trade, what crypto is, but basically get into a mastermind think tank about crypto, how to maximize and leverage money to make money in the future, and how to understand what's happening in this technological landscape that we're moving into, and how to be at the forefront of technology, this crypto mastermind for you, I promise. So that's all I have for you guys today. Expect another video. We'll be doing videos once a day on upload. Typically, they'll be uploaded about 4 p.m. every day, Monday through Friday. Occasionally, we'll be doing live sessions. But thank you so much for watching this video. Please do like, subscribe, hit that bell notification button. Go in that description, check out our sponsors. Go ahead and check out the socialcrypto.online. It's www.socialcrypto.online. If you don't put the www in, it's not going to go there. So just go into the description, hit that link. Much love, respect. God bless. Take care. Talk to you soon.